Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Friday, first day of October. As we get a new month started, we end a week that has been pretty busy. We thank you for joining us here on the show. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you can find us. And again, we get a lot to talk about on the show today. Pretty much another day of follow through from yesterday's USDA reports that we're definitely sent some shocks into the market. We got a lot to discuss. Let's bring in our good friend Ted Seifried with Zaner Agheads joining us today. Ted, great to have you back on the show. And man, what a wild week it has been. And we anticipated it, and it definitely lived up to the hype here this week.
Yeah, Jesse. I didn't really expect the report on Thursday to have such a profound impact on the markets as it did. The wheat one wasn't terribly. I wasn't surprised to see some shocks in the wheat based on the production. I mean, we knew that production is always a big question mark, but quarterly grain stocks should go pretty routinely. I mean, we should have a pretty darn good idea of where those quarterly grain stocks stand. But when the USDA starts changing production numbers like they have in the last few years, this report becomes more than just about quarterly grain stocks. It becomes really about looking back into last year's production. And that's where the trade got the shock on the row crops. And that was coming from mainly the soybean production being changed dramatically. If you take that change in production out of the equation, analysts had the soybean ending stocks really pegged. We had implied usage pretty much pegged. We knew where we should have stood as far as our quarterly September 1st grain stocks for soybeans, and what would have been our old crop ending stocks if it hadn't have been for that change in production. But that change in production made all of the difference in the world. And when you look at the soybean report, the corn report was bearish versus expectations, but there were some positive things in there as well. It wasn't a game-changing report. The wheat report was a bit of a game-changing report, as it can be when you have changes in production like that. But the soybean report was really the one that I walked away from wondering if this changes the outlook on soybeans going forward just completely. And the reason I say that is because last year we were operating under the notion that we were such a tight balance sheet that we could end up running out of soybeans at some point. Well, it turns out we didn't do that. And the reason for that is because production came in quite a bit higher than what the USDA had been reporting, to the tune of 80 million bushels. We saw a yield increase of 0.8 bushel an acre. So that means a couple of things, Jesse. It means that we take another 80 million bushels of ending stocks into this year's beginning stocks. So when you look at the USDA's 175 million bushel carryover that they had used on the last report, well, now we got to start talking about that number as being closer to 255 million bushel. But then also when you take the changes in production, I mean, it's widely believed that this current soybean crop that's getting harvested right now is a better crop than what we saw last year. Well, if last year's yield was actually a 51, that really calls into question the USDA's 50.6 that they're using for this year. Should it be a 51.6 is the question I'm asking myself. And by the way, that really goes along with a lot of the yield results that we're hearing so far during harvest. I think the general idea is growing that yield number should be bigger. And what happened on Thursday really put a fine point on that. So let's say we are at a 51.6 national average yield. That adds another 90 million bushels to soybean production and soybean supply. So you put that on the balance sheet, and all of a sudden we're talking about a 350 million bushel carryover potentially. And by the way, usually the USDA, when they raise supply like that, they look for ways to increase demand. However, when I'm looking at their balance sheet, I have a really hard time justifying increased demand at this point. Maybe that changes further on down the road, but for right now, I'm actually taking some demand away. And my carryover for soybeans is between 350 and 425 million bushels. So what a difference in mentality we have for the soybeans now compared to what we were thinking just a couple of days ago. We were thinking we're in a situation where we could possibly run out of soybeans, and now that's shifted to we've got a pretty comfortable carryover in soybeans. So I don't know how that plays out because on top of that, you have seasonality. A lot of times we try to find a harvest low and we try to see a bit of a bounce here. But based on the report that we saw Thursday, I'm not so sure we need to see that much of a bounce. It really is going to come down to what happens with China. Is China going to start buying more aggressively? And if they do, can they get back to numbers that are above and beyond what USDA is currently looking at and closer to what we saw for last year? If that happens, then we can say that maybe there is a scenario where soybeans do need to go higher and we do need to price ration demand. But until or unless that happens, we are not really in a position where we need to price ration soybeans, especially when we don't have all that demand on the books just yet. So are we going to counter seasonally go down because of this new set of fundamentals in soybeans? And how do we counter that with corn fundamentals that are still fairly bullish and wheat fundamentals that have now become really rather bullish? And then throw on top of that the idea of overall inflationary pressures in commodities as a whole. Even though the dollar has really broken out to new highs, and now we're actually even questioning the inflationary standpoint of these markets too. So a lot of question marks going forward. A lot of people not really believing what the USDA numbers were that we saw on Thursday. But if those numbers are actually true, which I tend to believe they are, because if you look at how basis was acting at the end of the marketing year, it seemed like there were more soybeans out there. If these numbers are to be believed, which again, I think they are, it really is kind of a game changer for the soybeans. And it really takes away a lot of the bullish story that we potentially had for this marketing year.
You talk about the demand from China, and I know that's a big topic here within soybeans. And we look at all the issues from Hurricane Ida in the Gulf, the shipping issues. We missed a decent little chunk here of our normal exporting time period, our time window here to get soybeans out of the Gulf to China. Wonder how much that played into some of maybe mentality we saw from USDA, and maybe just some of the changes we saw, and maybe just some of the thoughts in the trade in general here. You mentioned you're taking away some demand. How much is all the Gulf shipping issues playing into that for soybeans, do you think?
Yeah, that should not have affected the USDA's numbers at all. But as far as market mentality, yeah, you know, that becomes even bigger problem now that we see that we had more soybeans to end last year and we have more soybeans going into next year, because now it's a situation where we need all of the demand on that balance sheet, if not more so. And when you lose a couple of weeks like that, a few weeks like that, that just makes it even more difficult. I mean, we had seen China go down to Brazil and buy soybeans at higher prices just because they could get them now rather than have to wait. So, Jesse, I still have a theory on China that they have ambitions to go in and start making some bigger moves to expand their empire. When you start thinking about Taiwan and the South China Sea, and I think they want to stockpile soybeans to the point where they can do something like that and not have to be reliant on us for a couple of years, a few years. So I kind of think there's still a chance that the China comes in and buys more than what anybody's really expecting now. And I still think there is a chance for that bullish story in the soybeans. It's just a harder path to get there now that we have a much more comfortable ending stock projection. And listen, these are all my projections right now. We'll see what the USDA has to say on that on their October. Maybe they're finding more demand I'm not currently seeing. But for me, there's a more comfortable soybean carryover. It's going to take more from China to get us into that scenario where we need to price ration, where we need to start talking about price levels like we saw this past summer. So it's more of an uphill battle here for soybeans. But again, for corn and wheat, the friendly stories still kind of remain in place. And for wheat, maybe even more so than what we were looking at. Well, actually, quite a bit more so than what we were looking at just a week ago.
Well, we'll talk wheat in a second. Staying on the corn track, because I think this is another story that we're all starting to watch, is this rise in fertilizer prices. There's this talk out there of, hey, maybe we plant more soybean acres in 2022 versus corn, which would obviously, not add any bullish momentum to soybeans. But on the corn side, we watch basis. It's holding pretty strong. If we start taking away corn acres for soybeans because of fertilizer, that could also be a bullish thing for corn, I would imagine, as well, Ted.
Yeah, absolutely. And so we gotta watch the input market very closely. A lot of interesting movement there too at the end of last week. I mean, you look at natural gas was down sharply on Wednesday, had a very sharp rebound on Thursday, but then was down sharply again on Friday with the outlook of a warmer than normal October and possibly November and December. Maybe that gives natural gas a chance to build stocks with less usage in that first half of the fall and into early winter. So that might actually kind of help itself. The other thing too is what's going to happen with the South American corn crop. We'll be watching that very closely between now and early next year. If they come up with a really big corn crop, well, there might not be as much incentive coming off the board to increase corn acres. But just the immediate reaction after that report, I mean, you see how December corn is gaining value on November soybeans. The market is going to start asking more and more for those corn acres because of that fear. But absolutely, I've got guys calling me talking about, wow, input prices are through the roof. I think I'm going to have to plant a lot more soybeans next year. Let's look at hedging some of November 2022 soybeans. And I think that's a good idea if you are sure that you are going to be planting more beans, because again, a lot of guys want to be locking in those input prices right now. I'm not sure if that's a great idea. I do think natural gas prices do simmer down. I think we're going to have a much different climate when it actually comes to planting for next year. But at least for right now, that is definitely a concern that we have in the market, and it's just it's another reason to kind of be a little bit more bullish corn right now and a little bit less bearish or a little bit less bullish on soybeans.
Well, and looking a little more bullish on corn as well. We hear the stories a lot from a lot of end users. They're looking for corn. We hear a lot of bins that are just cleaned out, waiting to see what we have for this harvest here. And obviously, some yields coming in less than expected, some
Right.
coming in a little better than expected in the West. But I would have to think, this corn situation, we could possibly, like you've alluded to, see some bullish moves here in the corn market and continue to see this go higher, just because it almost sounds like end users are going to be looking for corn here the next couple of months.
Yeah, I think so. For what we talked about, the soybean report being really bearish because they increased production, they increased yield, and the general thought that this year's bean crop is better than last year's. Well, you can say the opposite about corn. They lowered last year's yield, which makes it maybe a little bit harder to justify the yield that the USDA is using right now. Maybe that's a little bit too high, especially with a lot of the early reports that we're hearing from harvest being a bit disappointing for corn. So maybe that yield is going to come down for corn. Maybe that balance sheet gets a little bit tighter. So there is that potential for a little bit more of a bullish story to be growing in corn even. However, Jesse, I'm going to say I've got sort of a thorn in my side with the corn market right now. And I think it's becoming a bigger and bigger issue. Although we've got a fair amount of new crop corn sales on the books, we keep putting together a string of really depressing, for lack of a better term, weekly export sales numbers. I mean, 250 to 350,000 metric tons is basically what we're selling per week for corn. I mean, a lot of times this time of year, these are daily sales numbers, not weekly sales numbers. So global end users, for whatever reason, are managing to stay away from aggressively buying U.S. corn at the moment, which makes you really scratch your head, because we're very aware of the issues that Brazil had with their second season safrinha corn crop. We are positioned to be really the major outlet for corn. We're the only big store for corn in the world, right? So we haven't seen these bigger weekly export sales. Have been really disappointing. But I think I'm hopeful that this is global end users looking for this sort of seasonal harvest low, trying to take a couple extra cents out of the market so they can buy just a little bit cheaper. And I'm hoping that there's going to be a flood of this corn demand coming back into the market sometime in the relatively near future. But if that doesn't happen, and we continue to see these really poor export sales numbers for corn, and ethanol has become a bit of a question mark and an issue too, with RIN values dropping dramatically on all the rumors and Well, these rumors keep getting stronger about the EPA really reducing the RFS for 2020, 21, and 22. You worry that maybe corn demand might not be quite as good as what we were expecting. So I mean, there's a lot of question marks that I have in corn. I think ultimately these demand question marks will go away. I think that demand will be there. And if that is the case, then maybe we do have a bit more of a bullish scenario for corn. But we're just sort of an awkward time of year right now where we need that demand to start to really prove itself. And for the fact that it hasn't, that just kind of puts me in an awkward position. And to some extent, I think that's kind of being balanced out or is balancing out um, the ideas that maybe yield could be coming down too. But, you know, a little bit less yields and a little bit of question mark on demand maybe just has a sideways in corn for right now.
On the wheat market, we've alluded to it. Friday was another follow through day. Really impressive strength in that wheat market. All three markets, Chicago, KC, Minneapolis for that matter. What are your thoughts on wheat as we move into the month of October? We had this strong report behind us now. What are your thoughts with what you're seeing in these wheat markets?
Yeah, so wheat is the hope of the grains right now, right? I mean, maybe wheat can just pick everything up by its bootstraps and start going. I mean, we have one of the tightest domestic balance sheets that we've seen in a long time for wheat, and that's going to be even tighter theoretically, or probably going to be tighter when we see the USDA's October numbers because of those production numbers coming in less than expected. But then you compound that with issues in Canada and with issues in other places of the world too. So wheat has actually really become, kind of an overall bullish thing. So you worry about that dollar getting stronger. You worry about what our exports in wheat might be, or the purchasing power of the dollar to come in and buy wheat from other places. But you look at the breakout that we had at the end of the week here in wheat, and the wheat chart looks really good. Hopefully there is more upside potential. Hopefully that continues to support corn and thereby keeps soybeans from really falling apart for the time being. But I really like what's going on in the wheat. That is the story that is the most bullish in the here and now. And the chart looks really good for wheat. So I'm hoping for more upside potential there.
We didn't touch on livestock really at all here yet today. Any thoughts you have with cattle and hogs? I know hogs have held some good strength here this
Yeah.
week. Cattle been kind of chopping around. Any brief thoughts on the livestock market?
It was a good week for the hogs, and it should have been, because we talk about a game changing report for soybeans this last week. Well, the hogs had one of their own. At the end of last week, that hogs and pigs report. Wow, a lot less animals out there than what we had thought. And I'm going to say hogs were trading at some lower levels that I don't think they should have been down into anyways. So, this week was kind of a snap back to reality. We brought prices back into a range where I think we're fairly fair value before that report even came out. I'm really rather bullish on domestic demand for pork. I'm bullish on export demand for pork. I still think there's more upside potential there for hogs. However, we went up pretty far, pretty fast there this week. We left two gaps below us. It wouldn't be terribly surprising to see a little bit of back and fill to fill some of those gaps, or at least fill that first gap and maybe get into the second gap. But longer term, I still see more upside potential there for the hogs. As long as the big A word doesn't happen in North America, I think we're going to see our exports do very well. Again, export or domestic demand, I think, looks good. I'd like to see the hogs go higher. I'd like to see the December hog contract, which is trading about 85, get to where the October looks like it's going to be going off on the board, which is going to be mid to lower, or mid to upper, lower to mid 90s. So I think there's upside potential there. The question is, does that December hog contract come back down to 82 before going to 92, for example? I think that is a possibility. But overall, I'm optimistic on hog prices. I think that December contract has upside potential from where we're at.
Well, Ted, before we run out of time, any other final thoughts you have for us? Anything outside market wise, or anything else you want to reiterate here today?
Yeah, I mean, I'm watching energies very closely. They go back to the input cost conversation and what acreage is going to look like for next year. But wow, what exciting markets we've had in energies, what volatility we've seen in natural gas. But crude oil still looks really good on the chart to me. I still see more upside potential. I'm targeting 82. And, that could be a good thing for ethanol. It could be a good thing for biodiesel. Hopefully that is a headwind for commodities markets as a whole. But my biggest takeaway from this week, and I got to say it again, is have we changed the game? Have we changed the mindset in soybeans? In the next week or two is really going to prove that out. And again, a lot of that's going to be dependent on what China feels about that.
Well, Ted, if producers need a little advice, I know you can give it to them with Zaner Ag Hedge. What's the easiest way to get a hold of you?
Absolutely. You can reach me directly at 312-277-0113. You can also find us on the web at www.zaner.com. You can read a bit about us. You can also sign up for our morning newsletter. And if Twitter's your thing, I am at the Ted Spread on Twitter. I like to talk about whether hot dogs or sandwiches. I do handstands, but I also talk about markets sometimes too.
The Ted Spread on Twitter. It's a good way to stay in touch with him, and of course, find him at Zaner Ag Hedge and get a little advice if you need it. Ted Seifried, appreciate the time as always, my friend. We'll talk to you again soon. Thanks so much.
Thanks, Jesse. Have a good one.
This is going to do it for the Friday, October 1st edition of Market Talk. Find us at markettalkag.com. I'm your host, Jesse Allen. Have a great weekend and a great rest of your day.